I always tell clients too, like, hey, you don't want to be house poor. You don't want to put yourself in a position where you're just living. I mean, you're working to just pay where for your place.
To put all of your efforts in figuring out what are my gifts, what are my passion, what value or service can I bring to the marketplace that somebody, a consumer, will pay for. And then over time you keep building the wealth and building the wealth. Then you can use that to build your future home.
The average person, at the end of their life, their biggest or their largest equity or property they're going to own is their personal home, right? Because people are not disciplined enough where, yes, if I don't invest this money and buy my own home, I'm not taking that money and investing in the right ways.
But when you actually, let's say, a first-time home buyer, right, and you're going out there, there's a lot of things you might not look into. If you don't have an agent, you might not know you need to inspect the roof or even have an inspector to even do the work before you actually go in there.
Let us do it.
Welcome to the Wealth Based Podcast. This is episode 6. Again, my name is Caleb Solomon. I'm the co-founder of Jara Capital, and I'm here with my co-host and fellow co-founder Toyyib Morakinyo. What's going on, my brother?
I'm doing well, man. Feel like we took a long break, but
Yes,
we are
we did.
back. We're back. It's been a lot of grinding. It's been a lot of work, but for all good things, so we're glad.
Yes.
Yeah, I mean, speaking about a break, we don't want to share with the audience what we've been working on. I know there's been a lot of activity, especially with
Definitely.
Jara Capital.
Definitely.
There was an acquisition. Want to
Tell them, yeah. So I think we made the public announcement was that about a month and a half ago, right? But we were fortunate enough to double our portfolio here in Dallas Fort Worth, acquiring another 4 units. So we're sitting at 8 right now, which is nice. We kind of know that area really well. The opportunity came, so we needed to take some time and focus on that. But talking real estate, acquiring properties, that's all passion. So we couldn't get away from the podcast too long.
Exactly. Again, thanks a
Congratulations,
lot.
guys. Big time.
Appreciate it, AU. Thanks.
That is amazing.
Awesome.
Thank you, man.
So, yeah, thanks to you for sharing that. And I think, as always, our goal is to educate, enlighten, and also to entertain our audience in technology, economy, and real estate while inspiring you guys to take action. Today's podcast will be solely focused on real estate because there's a lot has been going on the past few weeks and months. So we'd like to double click on the changes happening there. The buy and seller market. So, but before we jump into the agenda today, we have some special guests in our midst today. Ayo is a returning guest, was on our last pod. Go check it out. Episode 5 was amazing. But we have a new guest, Mekkel Blanchard, who I'll give the floor to Toyyib to give a quick introduction as to who he is, and then he can.
Perfect. And yeah, that's a great setup there, Caleb. Right, because you're right. We have 2 amazing folks on as well. Right, Ayo coming back. The man's a seasoned property manager as well as a real estate investor. So he's bringing that wisdom out of the DC area. Always good to see you, Ayo. Thank you for last podcast. You were so great. We decided to do it again. So this is a good sign. You keep it up. And as well, another good brother of ours is on for today's session. We've got Mekkel Blanchard, who is a full-time realtor and a full-time real estate investor. The man is based out of the Massachusetts as well as the Rhode Island area, so he's well represented in the Northeast here as well. He started investing in real estate in 2018, earned his real estate license in 2019, and was able, just in 2021, was able to quit his full-time job and do the real estate full-time and the investing. So that's a man that knows his stuff. The man is passionate. And over the years, he's also dabbled in all forms of the real estate market. I'm talking long-term rentals, single-family, multi-family, short-term rentals, fix and flips, Airbnbs. The man knows it all, so we're really glad to have him. And as of today, the man currently owns 4 properties, and he's currently looking to expand his portfolio while looking for ways to help and others grow. Mekkel, so glad to have you on, brother. How are you?
Good. Thank you guys for having me.
What else did I miss? Tell the people a little bit more about kind of your real estate journey, how you was able to make that move from getting your real estate license to then doing it full time.
For sure. So that was pretty much the high level overview, but it's been great. There's been definitely ups and downs, but started picking up my first property in 2018 and kind of doing the house hacking. So living in a property and kind of renting out the other units to help offset your mortgage and expenses. And I kind of just took one step at a time and let it snowball into more. But finding properties on market where the numbers worked and just kind of taking action.
No, you did it the right way. It's impressive to see kind of how you've been able to scale up so quickly. So it's impressive. It's really impressive. I'm telling you.
Yeah, it's amazing. Plus, I was looking through, your education history. You did, I think you did business administration, so you have a strong business acumen. But it ended up so that you worked at, for a large retail Costco, and that transition to real estate. I think you did it for about 10 years, and that transition from that to real estate is quite interesting. Can you walk me through why you decided to pivot away from, the wholesale industry to real estate?
For sure. So yeah, I went to a college out here, Bridgewater State University. Got a bachelor's in business management, and then while I was doing that, I worked at Costco and moved up very quickly. So Costco is retail. It's a great company, good benefits, good pay. Just you got to work weekends.
Yes.
And so luckily, I moved up very quickly, became a supervisor within 9 months, and then became a manager within 3 years. And by the time I had left, over the 10 years, I became a staff level manager. So just more responsibility, more pay. And that's what I used. That was my vehicle to start purchasing properties. And basically, I looked good financially for the banks. And that's how I was able to kind of buy one and kind of snowball into more. But it was nerve-wracking to leave that full-time job and to go into real estate because, as everyone knows, it's up and down. But I did it very cautiously. I went part-time, and then slowly, as my realtor business grew, that's when I said I got to cut ties. I need more time in real estate.
Interesting. Amazing story. Thanks for sharing that with us.
Mekkel.
Well, let's jump into the doc. We have a huge docket today. A lot of stuff to talk about real estate today. We're going to be talking about I think there was a settlement that happened, almost close to $500 million antitrust settlement against the National Association of Realtors. We'll talk about how that will impact the real estate transaction between the buyer and seller. We're also going to double click on the current CPI numbers today and the affordability crisis. Given that we have sticky inflation, and obviously things are getting expensive, are people able to afford homes today? And also, what is the impact on also multifamily rent growth? We'll definitely double click on that. So without much further ado, let me share my screen to share the context for what is going on in the market today with respect to what got approved. So I believe it was about a month ago that it was the U.S. judge approved almost $500 million in the settlement against the National Association of Realtors, NAR. And I'd like to jump quickly to this part of the the story here. It says that under the terms of the settlement, home sellers will no longer be required to offer a commission to buyer's agent in order for their properties to appear on MLS service or the multiple listing services, which is where most home sales originate today. Commissions still can be negotiated as part of the process. Just to provide a context, so basically, I read the whole lawsuit as to what is going on, and two main points that I captured from it. So number one, currently today, the seller of a home pays for the buyer's agent commission, which is typically around 5 to 6% fee commission split between the buyer and seller. But now with this lawsuit, the buyer will now be responsible for paying the agent's commission going forward. So with that, I'll yield the floor to Mekkel. Can you walk us through what is the impact of this lawsuit to buyers and seller? Would there be a change in business model? Will that affect your commission? Like, just walk us through exactly what you're seeing in the market today.
For sure. So I think it's definitely a curveball, especially for buyers, because it's already an affordability issue. Interest rates are tough. So buyers are thinking, what am I going to do? How is this going to work? And of course, realtors are like, who's going to pay me?
Exactly.
At the end of the day, I still think it's in the seller's best intention to offer a commission because, once they take this away, there's still going to be a huge buyer pool of buyers who can't afford to pay that additional cost to a realtor. So if they take that away, you're losing a huge amount of people. And then until they figure something out, if they can roll it into financing, which I'm pretty sure it hasn't been approved yet, there's no way for buyers to buy in this environment, which makes it hard.
That's a good point. Hey, Toyyib, want to go ahead?
No, I was going to just jump in there and say, I think, Mekkel, you made the point around maybe this is going to roll into financing, but you're right. You know, from a buyer perspective, where typically you just know, hey, I'm paying $500,000 for this home. My agent is going to get the commission somehow through that price, and that's all I have to worry about. Now you got to get good at negotiating directly with your agent, right, and figuring out, well, who's that money coming out of? So am I paying $500,000 for this house plus additional 3% to make sure that I compensate you for your time and service? So I guess that's still yet to be figured out, but we'll see.
Yeah, and part of it goes to, so I work with a lot of investors, so sometimes I may find stuff off market. So it's just having that conversation with your buyer client ahead of time, saying, hey, should we find something off market, or should this property not offer a commission? It'll be your responsibility. But still, today, commissions with listing a property, it's not required. You could put as low as $1 in there. It's just it's been the standard and what people have done because they understand, buyers typically don't have the funds. But now with the new settlement, the commission piece won't be in the MLS, so you can still market it, but not through the multiple listing service.
Yeah. Well, the key, and I'll pass the ball to Ayo. The argument that most of the realtors are making today is that most families or most individuals' net worth is tied to their home, because the average median home today is roughly $400,000, $500,000 a year. So if you're going to make this huge purchase, you need somebody who not only is knowledgeable in the market, but somebody who can act as a trusted advisor during the purchase process. So that is your argument. Listen, we need you, but in order for you to, get these people to, help you acquire the property, they have to be compensated fairly. Now, with the proliferation of technology, now people can go to Zillow. Do I really need a real estate agent to help me look for a home, to do the open houses? Like, is it? So I guess for the average, family looking to buy a home, is it important for them to look for a realtor to buy a home, or can they say, listen, I don't need you to look for a home. Like, I can go to Zillow, I can go to the internet, and then buy directly with the customer. How should they approach it today?
Well, I mean, if I was to look at it this way, you still need an agent, regardless how to sell and to buy. I think the importance of having a real estate agent is still going to be there, regardless of how this commission, situation actually comes in. I really, just kind of looking at the data, I really don't think it has changed much with this commission issue, as much as it just makes it a whole lot harder on the seller with this, because yes, buyers, now it just kind of makes it easier for a buyer to go out there and say, hey, I don't need a real estate agent, I could just buy a property. But when you actually have a professional agent there, they are bringing that knowledge of things that you might not see from a real estate buy-in standpoint, unless you're a real estate investor, right? Who is actually a seasoned person. You've actually kind of gone through, the trials and tribulations to actually know exactly what to look for. So you might not really need an agent, right? But when you actually, let's say, a first-time home buyer, right, and you're going out there, there's a lot of things you might not look into. If you don't have an agent, you might not know you need to inspect the roof, or even have an inspector to even do the work before you actually go in there. So having an agent is still going to be important. I still think it's here to stay for a very long time. Yes, it is. It makes it easier for you to go on Zillow or Redfin and be able to kind of find the property and then put that in. An agent comes in again as a negotiation representative for you. I think that's the biggest one, really. When you actually have an agent come out and show you the comps and say, hey, this is my budget, and they could go out and find you something of a quality and be able to say, hey, okay, my budget is $450, but if I find something for $500,000, and they could go in there and negotiate it down for you, is really, really still important that you would still have an agent. Now, with the commission side, I always say this, right? With the commission side, this NAR thing, it doesn't change anything. Seriously, I think it just, I think it makes it, it doesn't change anything. I think it makes it harder, really, for the buyer, not really the seller, right? I just think a buyer who
explain double click on that. on the buyer perspective? How does it make the
absolutely. Because I believe when you actually have it from a seller standpoint, right?
Okay.
And I just want people to picture this. When you have it from a seller standpoint and the seller is actually paying the buyer's agent, it makes it easier on the buyer side that comes with just a flat out $450,000, and that's all you have, right? To actually buy a property. Yes, you still have closing costs, but now I have to add commissions to it. It really changes like
how you think about
negotiation and what you could really go for, right? I think now it makes it a bit harder for the seller. And now saying to themselves, okay, I already have an offer. Let's say the property has been in the market for close to 2 months and you really want to dump this thing and you finally have a buyer, you would have no choice but to say to yourself, I will cover your buyer's agent's commission. But I think that's what it really was when it comes to this lawsuit, was we wanted it to be an option for the seller to be able to say, hey, I will take the buyer's commission, and not really more of a boilerplate or a standard thing, right? I believe that's what it really was, not more of like a penalizing to real estate brokerage companies or stuff like that. But I think it puts a little bit of the weight on the sellers, truthfully.
Yeah. Toyyib, any thoughts on that?
And go ahead.
Yeah, I'm about to say, any thoughts on that? And also number two, I think the argument could be made in terms of how compensation is executed today. Okay, today I'm trying to buy a home today. I get a buyer's agent to help me look for the home, right? And then they'll work with the seller to about the commission. Why should I? For me, let's say I want to buy $1 million home, right? Why should I pay the buyer's agent? I think the fixed fees are 6% or something. 6% of the absolute value. Yeah. That is burner. So it's like I'm not making money. It doesn't make sense to me. They should be paid based on the work they do. So from that perspective, Toyyib, do we need to redefine how payment is made? Should it be a variable, maybe a fixed, maybe a flat fee? $7,000 for you to find me, and then if you could get more out of the deal, I'm going to give you 10%, like a prorated system.
Yeah,
because for me, it doesn't. Go ahead.
Mekkel will speak to this, but the commission has always been negotiable, right? Like it's negotiable, but the standard has always been 3% to your agent, 3% to the buyer's agent, right? And that's kind of that's what the market overall has accepted, but it's always been negotiable. I do think what it does now is that especially with the increase in technology of Zillow, Redfin, so many places, and people are more active, especially the millennial buyers are more active looking for their own homes. There is that pressure or that expected change from a buyer's agent to bring more to the table than just going out to go find the homes for me. And Mekkel, I have to be honest, right? Some realtors, and I've known some of them, I've worked, they can be lazy, right? They just send they just send you what is basic on MLS, what is basic on Redfin. And I think there's a sense of like, well, you're not really doing any work. So for me to want to compensate you, you really have to bring in some of the aspect that Ayo talks about, which is, can you do better for me in terms of negotiation? Here, this home is listed at $480 and the comps in the area is $465. Do we get a price reduction, or do you get a seller's credits towards your closing costs? Like those kind of things are areas where I think an agent can make a difference. And when you have an agent, when you find a great agent who's doing those stuff, I'm more than willing to pay you the 1 or 2%, right? If you're saving me $10,000, $15,000 on a home, absolutely I can pay you, $6,000, $7,000 because, right, the value to price, their ratio is in my favor. So, Mekkel, I think this does challenge some of the agents a little bit to do more work. We'd love your thoughts there.
Yeah, no. Everything you guys just touched on was great, and I think the settlement is great. It's going to shake things up, and it's going to probably eliminate a lot of those part-timer agents, or the ones that aren't really performing or showing their value. So you do have to show that value. And to touch on what Ayo said, was pretty much a sophisticated buyer, right? So I look at everything, it's like 80-20. So it's still a service that we're providing. Probably 20% of people will be, sophisticated enough and will be able to find the right tools to purchase a property. But then you may have issues with like dual agency and with the seller's agent kind of representing both. But at the end of the day, it's still a service, and there's a lot of people out there that need help, and they can't focus on real estate full time. They don't know the ins and outs. They don't know, what things to look out for and how to find the best deal for themselves.
Yeah.
Yeah, that's a great point.
Go ahead, Kayla.
No, I was about to say, I think there's going to be this. I see the system, disrupting in the sense that there's going to be a fragmentation in terms of the services that will be provided, like a la carte. If I need somebody to do my closing state, whatever, I'll break it down in the segment. Real estate agent, I need you to, in the community, find me the best in the best location, buy it from me. I don't need it for my title, or I don't need it for my closing costs or my due diligence or my disclosures. It'll be breaking down into segment, and then it's going to be flat fee payments, where it's like I'm not paying you 2% of whatever value. I'm giving you $7,000, $5,000 for the work, or it could be per hour. That is where I think this could potentially lead to in the next. I don't know when. Obviously, this hasn't been approved yet in the by the federal courts yet. But I think if it's approved, I see lots of startups disrupting the market. Where like what Zillow did to the in terms of a buying and selling. Now there's going to be multiple startups building specialized services to automate it, like the paperwork, to automate those kind of processes to make it more efficient. But I agree to your point, Ayo. Listen, at the end of the day, if you're going to make a large investment, you need somebody who can be a trusted advisor. My point is, if you're going to be a trusted advisor, you have to show your value. If I let's say I have a listing in the MLS market for let's say $1 million, and you can sell it to me for 1.5, I want to pay you on the. I'll give you a flat fee. In my opinion, I'm going to give you a flat fee for the $1 million because, but if you can sell it 1.5, and I'll give you 20% of the $500,000, not 20% of the 1.5. It doesn't make sense.
But that's you negotiating from a sophisticated investor point of view, right? Like
exactly.
You made this point around like most people. How many times are people really purchasing real estate, right? Most people, it's one time I buy my house and that's it, right? Like my mom bought a house 25 years ago and she hasn't really bought much else from a real estate perspective. If you only do it one time, I don't think you as a full-time employee, you're thinking about, okay, all the 5 different people I want on my list. I want a lawyer. I'm going to pay him $200. I'm going to pay my real estate agent $550. This is not a high-end restaurant where you're just picking up, a little steak here. I want the potatoes on this side. It's not going to work that way. I don't know. I can't see that being the mass approach.
Yeah, I agree. I think that's the biggest thing is, from Kayla, all of us on this podcast right now, we are real estate investors, right? And we know who we need in our team, right? So we've built our team, so we know exactly what we need. When it comes from like just the average Joe, husband and wife with 2 kids, and now they have a baby on the way and they have to expand, they don't understand what a team is, right? They just know they need a bigger house, right? And if we have to tell them, hey, your closing costs will be estimated, and it's not really fixed, right? We're telling them estimated is going to be, around this percentage, right? They already have a budget. You get what I'm saying? And I'm just looking at it from the idea that this is why I feel like it really doesn't change anything. It just only gives the choice to the renter, to the seller, because if I'm on a budget, and I'm just gonna think from a buyer standpoint, a first-time buyer standpoint. If I'm on a budget, that's the money I have. I hate when people come over and add and tack on top of it. It's gonna be your loss at that point, right? So it's kind of like when you have an agent come in and they're saying, "This is my commission." Of course, it's gonna be the commission of the entire cost plus closing costs. That's what I think. So I see sellers still going for it, and I don't see what sellers really lose in this. And you guys will know where I'm going with this. Is like, you still get that equity, you still get that, you still benefiting regardless. You don't really lose as much as just that commission that you're actually getting. But unless maybe you have something budgeted for that last $5,000 or $7,000 that you're giving to the buyer's agent, sometimes you would just brush that off, because there might be a way where you could be able to make that money back. But if you're making enough from that, I'm just giving an example. You bought the property for $200,000, and the equity has gone up on the property. Of course, you were paying it down during that time during the mortgage. You're up, right? So you would not really care too much about the buyer's agent's commission. That's just my thing. I just think it just is just a good thing to be able to put in there to say, hey, seller, you have the option to negotiate this now unlike before where
That's
it
right.
was just more of a standard thing. I still don't. That's why I don't see it changes anything really.
Agreed. I think sellers, like you're saying, are in the best position because they typically have the funds available, and a lot of people tend to forget realtors were paid $0 an hour with no base pay. So until we perform, we got to hustle and
That's
show
true.
that value.
That is true.
Yeah,
M-
you kill
Mekkel,
what you eat what you kill. Sorry, that's what we call
Yeah.
it. Right? Yeah.
Yeah. Mekkel, so to that point, I want to ask you, I mean, you're active in the field today. Are you seeing more buyers trying to do kind of more upfront negotiation with agents around commission now than ever, or you're still not seeing any of that even in your market today?
No, not seeing any of that. A lot of people honestly don't even know. So unless they're watching the headlines,
That's true.
A lot of my clients don't even know. But I'm explaining to them, and a lot of them, are unaware, but explaining the whole process. But right now, commissions are still being offered. I mean, I've seen some listings because you can go as low as $1, and just explaining to clients like, hey, we'll have to figure this out.
No.
Have to have a conversation.
Okay, because I'm not doing this work for free. Right? Somebody's got to pay for it. So, yeah.
I really like what Caleb really pointed that out about, kind of paying the hourly. That is going to be very interesting. I think that's a good entertainment, something to entertain, really, because I think it's going to be more of a performance-based.
Performance-based,
kind of
like
pay.
I said.
Yeah.
For example,
I just don't
in
know.
sales.
Yeah. No, go ahead.
I was about to say,
Sorry,
for
go ahead.
example, in tech sales, we have like your base salary that you get and OTE. So you
Right.
have a fixed salary you're going to get, and then if you perform, you're going to get X amount of dollars. So
Right.
that could be instead of full commissions. I mean, because let's be honest, sometimes like, for example, our first. Again, I don't want to. I'll stop saying what I'm trying to say, but
It's the podcast. I love it.
No.
I don't want to go rogue, but I've not seen so far the acquisition that we made. I feel like it was we had an amazing realtor who helped us get connected to the developer for us to buy the building. So that was the uniqueness that he brought to the table, and he's very experienced, educated us. But there are some moments where realtors don't. Like you said, like Toyyib said, they just don't put in the work.
That's why you
Like,
got to
they
show up.
give
Yeah.
you
Right.
Some buildings. But also the arguments that you wanted to say something before.
No, I was just going to say, right, like, I mean, Mekkel made a great point around it. It becomes more of, it's going to separate the great performing agents from just the one who just want to show up and show you a house. And I'm sure for someone like Mekkel and Ayo and people like that who enjoys and thrives off those kind of environment, like perfect, less bad agents in the market and really the cream really rise to the top. So
I agree.
It could be that way.
And also to add to your point too, I think there are about 1.5 million national store realtors. Let's estimate that I don't know, from 80-20, let's say that 20% of those realtors are making the money. I see lots of realtors going bankrupt or having without business.
They're just gonna move out.
If the disruption like direct to people start selling their stuff directly to the consumer itself and leveraging technology to do that. That could be a huge disruption. So now they might have to find new jobs.
Yeah.
And one other point that they made was around this. If this approved, I mean that more money will go into the pocket of the seller and also the buyer as well, and that can potentially bring down the cost of housing. But let's see this. I'm going to share this screen with you, respect to the current mortgage rates, because that obviously impacts the price of housing today. Let me share the screen. So there's an article that was released by the National Association of Home Builders talking about high mortgage rates, hammer builder confidence in May. I'm going to scroll down to the third paragraph. I'll do the third paragraph. So the market has slowed down since mortgage rate increased, and this has pushed many potential buyers back to the sidelines, said the National NAHB chairman Carl Harris, a custom blah blah blah. We are also concerned about the recent code rules that require HUD and USDA to insure mortgages for new single-family homes, only if they are built in 2021, whatever. It's a lack of progress on reducing inflation pushed long-term interest rates higher in the first quarter, and this is acting on a drag on builder sentiment today. So, okay, great. Let's say you're trying to put money into the pockets of buyers and sellers. Mortgage rate is still all-time high. I think the last time I checked, it dropped down. It's still at 7%. So, Mekkel, is it a right time for the average consumer today to buy a home? or should they wait for the potential recession to happen? Your thoughts on that?
No, so I always say if you're financially stable and ready, take action if you can handle the monthly payment, because at the end of the day, you're paying down your mortgage. In real estate over the long term, you're going to see appreciation, and you'll just be in a better position. Like we were saying, how sellers typically can handle because they have equity. And then a lot of people are stuck on the interest, but even pre-COVID, rates were around the 4 and 5%. Everyone's just stuck on the 2 and 3 that we had. I'm not sure that'll ever happen again, but if we can drip down just to the 6s and high 5s, I think that'll be a healthy market. It's just you got to take action. Of course, I've always pushed buy multifamily, but if you can get anything, a single or condo, you're still paying down your mortgage every month.
Hey, your thoughts on that?
Your thoughts?
Right time to buy a home is, should they consider buying an investment property or buying a home that is taking money from their pocket? That's why I view owning a home. But go ahead. I think you're
mute.
Hey, yo,
Did you go?
we can hear you.
I'm
Yeah.
sorry.
There
You
you
guys
go.
can hear me. I'm sorry. But
Yeah.
I believe Mekkel actually made a good point there, truthfully, when it comes to buy-in. I think the days of when you had low interest rates are gone. Like even if they drop the rates down, it's not going back to what it was 3-4 years ago, right?
Yeah.
I still think I think people should buy as they actually need it. But
Yeah.
it really goes back to your personal financial stability and going for exactly what you want. Do I think this situation that's going on right now really affects a lot of home buyers? Not really. I think it affects more real estate investors like us, right? And I'm just looking at it from a bank situation, right? We know exactly how we use our 1% rule and all that kind of stuff to actually kind of buy properties. Having properties going like really high interest rates, and which also, I mean, prices are not even going down on sales right now, of course, because there's a shortage of houses, right? I think it really kind of strains it for investors. Home buyers who are planning to stay there for 30 years, they're just hoping their equity never goes down on the house the moment they buy it, right? I think that's just their fear of buying. And I mean, I don't want to get into the financial technicals, but of course you could write that off, right? The interest rates, you could definitely use that. So for a buyer, if you need it right away, look at your financial stability and really come to terms with what you have. And maybe you might have to roll up your sleeves and do a fixer-upper and get something for what you want. But you just have to look at it specifically from your financial stability and what is really good for your family on the long run, and just make your decision based on that. And don't have financial the interest rates really dictate what you should do. I think the people who should dictate it for are investors who are, we're serial investors, right? We know exactly when is the right market to really buy. And we know more of when there is a shortage in the market or when there's a price hike and what it looks like when the equity in the next 4 or 5 years looks like. I think for an average home buyer who really needs to who are just looking for stability and probably not moving, I could buy right now if I need it. I wouldn't care too much about the interest rate. And when the interest rate goes down, I'll just refinance, right? Yeah. And just do that. I think it's just for the fear is there of the interest rates. And I think it's going to be like this for a while, which is, it's a fear, it's really painful. But I think for average home buyers, they should be looking at it more from an equity standpoint of what their property will be valued in the future, instead of looking at the interest rate. I think that's how I will pivot my focus and my focal, and not more into the bank interest rate. I think from a standpoint is really more of an investor and a seller standpoint. That's it.
But guys, do we have, if I follow up on that, it's like there's one thing about the timing. If I'm thinking about just buying my family home, I'm actually more concerned about the quality of supply that we have in the market, right? Because there's been a lot of talks of that over 60% of homes right now are locked in on the mortgage rates of like 4% or lower. So if you're a person who's looking to buy your first home, starter homes. These starter homes that people should at this point be looking to trade up for, they're holding it for a longer term, right? Because they're thinking, I have a 3% mortgage and you're asking me to go to 7% on a bigger home. And so it's like, okay, well, so do you even have quality supply in the market today that I'm like, yes, I absolutely want to go. So then the next point is the interest rates. Let's be honest. If you grew up pre-COVID where you saw 4 to 5%, COVID came, and I remember one of my coworkers at the time telling me she just refinanced and now she's locked in at like 2.5 and she was ecstatic. But this was for a condo, so I can only imagine now if she's got married and has kids and want to trade up, how she's looking at a 7% interest rate. You all know this. It's also an emotional decision when you're buying a house, right? Especially at home for you and your family. It's tough to think about, like, okay, I know this property used to go for $400,000, now it's at $550, and the interest rate's at 7%. I'm gonna just stay in this house a little longer, okay, wife? We don't need to complain. The kids need more space. Let them share the room, all right? We're gonna be here for 2-3 more years, and so maybe I think some people are waiting for more supply in the market, and I don't know if we'll necessarily get in there. And hopefully, new construction in some spaces, like in Dallas, we're seeing some of that, but I don't know. So from a timing perspective, if you find something you love, absolutely, you need to take a move. But are there properties out there that people really love and like, yeah, this is the right one? I'm not sure.
I agree, and I think,
that's such a good comment. Sorry, go ahead.
The supply-demand gap is definitely, huge, especially I think in Dallas, Texas, or in Texas in general. There's a report that came out about a year ago that there's still we still need over 100,000 units to meet the demand. So there's a lot of a building that needs to be made. But I think I'd like to take a step back so we can educate our audience today. And I know we've debated about this topic till the cows come home, but I'd like to hop on it again. Should the consumer view buying a home as an investment or a home as a place they're going to live in? Because if this context is not crystallized, we might misinform them and say, hey, buying a home is, and living in a home would change your life, which obviously we know that, 2008, 2009 did not prove that. Actually, buying a home was actually a liability and not an asset. So how I'm thinking about it is like, even in this time or in this crisis where, obviously housing affordability is quite tough to get and there's limited supply in terms of housing stock in the market, maybe they need to think about, hey, how can I collaborate with my friends? If I have 3 to 5 friends who are doing good, maybe let's do a syndication. Hey, let's put our money resources together. Let's buy a duplex. Let's rent it out. Let's build it instead of me owning a home and being. So I guess that is where. How should the average consumer view acquiring a home today? Should they view it as something that is going to change their life? Or, Mekkel, I'd like you to take that because you do a lot of families buying a home. I'd like to learn more about the psychology of the average person buying a home today. Maybe you can advise them as to how they need to approach it.
Yeah, so it really depends on each buyer's appetite and if they're an investor. But honestly, I work with a lot of investors, so you just have to be creative today. One example for me, if someone's trying to buy a property and they need additional income, but maybe they're only qualified for a single. So I bought a single family myself with an in-law suite that has its own private entrance. It had a kitchenette, so I added a bathroom once I bought it, and now I rent that section to travel nurses. So you just got to be creative, and you can do cool stuff like that. Or I've had other investors where they bought a flipped property, so it was all renovated, all nice, 4-bed, 2-bath. They turned the dining room and living room. They just put up a wall in between, created 2 additional rooms. And then the attic where it was finished, and it was huge. So they just created 2 rooms. So they turned it from a 4-bed, 2-bath to an 8-bed, 2-bath. And then they rent it out as midterm rentals for 30-day plus stays to working professionals and students. So on the investor side, there's more creativity that you can come up with. And depending on the buyer's appetite for primary residence, you could do the whole in-law suite or a finished basement that you can try and rent out. But it's just getting connected to those that can help share those experiences and bring that value. But at the end of the day, I think, obviously saving money, being in the position to take action once you find something, because we're in a market that if you see something you like, you got to strike fast. And it's very competitive because of the
Yeah.
the demand.
Yeah, Toyyib, I mean, given the, I was looking, there's an article that came up was saying that the U.S. households debt, it rose by $184 billion. Let me just share my screen real quick. Can talk through it. $184 billion in Q1, right? It said the overall debt accumulated by U.S. increased by, during the first quarter, climbed $184 billion.
Spend that money.
To $17.69 trillion. As the rate of credit card and auto loan transitions into serious delinquency persist. And then when we look at this chart over here, the total debt balance, they look at the housing debt, is at close to $13 trillion, but non-housing debt is like almost 17.5, almost close to $18 trillion in debt. So we're over here. Exactly. So my thing is that, Toyyib, what is the first thing that the average consumer should definitely consider buying a home, like from a personal finance perspective? Because everybody's going to be excited, want to buy a home, but
this is where I'll put the onus back on Mekkel and other realtor agents out there, which is to help people really do a real assessment of what their affordability really is, right? Mm-hmm. And oftentimes, and that's why we talk about home buying, especially your personal home buying, as such an emotional decision that people are not necessarily willing to get real with themselves. Like, hey, mortgage is going to be $5,000. Your rent today is $2,500. Oh yeah, if we cut back on this, oh yeah, we'll be able to make it. You're not, okay? Let's get real. What's your debt look like? Or you got student loans, you got credit card debt, only one household income. What can you really, really afford to be able to buy this house and sometimes manage the emotion? It's hard to take, I don't care what anyone says, it's hard to take the emotion out of it. So, of course, it's going to be an emotional decision. However, people absolutely need to get clear on what your monthly expenses are and not just look at mortgage like, oh, yeah, if my mortgage is $5,000, it's always going to be $5,000 to the day I die, and you're not budgeting maintenance, you're not budgeting taxes, insurance. We've seen in the investing space, we've seen property insurances skyrocket. Here in Dallas, we went through a renewal just not too long ago, and them premiums are up $1,000, $2,000. So if you're not in a space where you can do that, there's absolutely nothing wrong with renting. And Caleb, right, that gets to your point of there's dignity in renting. If you're not in a space where you can buy a home right now, it's okay to take the time, save up money, make sure you're in a comfortable position. But I am on the, here's where me and Caleb kind of have different perspective, which is, I am not necessarily team rent for the rest of your life. I am not there. I do believe, listen, not everything has to necessarily be an investment view from a financial perspective, right? There's something about the emotional or psychological safety or comfort of I go in a house and I'm my own landlord and I can set my own rates and kind of have my family there, and this is where we put down roots. That can still be a return on investment that's outside of just the financials, right? But I don't think you should rush there because you're thinking, oh, yeah, this is such a great investment that I need to go rush and buy a home right now, even though I'm not ready. But I do think if you are ready, absolutely, get yourself a nice home. Like I told you guys like 2 podcasts ago, I've got my picture of a white picket fence and a big old house that I need to get for me and my family. So it might be a bad financial investment, but I'm still going to do it anyways.
No, again, so you have a good point. I think my counter, factual argument is around that most people view their home. I get an emotional attachment to it. A home being a safety, a safety net or a place of safety where you spend and bond with your family. But my thing is that if you can do the same thing renting, like for example, my favorite quote of all time that I stole from Grant Cardone, one of the greatest real estate investors, it said, "Rent where you want to live, and own what you can rent out." Why did he say that? He basically is the concept of about the place that you are staying at. Make sure you are renting the place. Like, would you rather want to rent a multi-million-dollar home and have an amazing amenity, or own $1 million home that comes with the stress of the maintenance cost of it? And then every 3 years, if you there's wear and tear in the home, you can go to another property and go get the same, $1 million experience. So I think it's all about access. And for me, I think, access is more important than ownership. That's my philosophy. I think if I can have access to a great location and I'm paying, and I'm not. It's like, for example, I'll just pivot to the cloud model. Back in the old days, when tech companies wanted to build a company, or when companies when they wanted to build when startup wanted to build a company, they have to buy servers and storage, and they have to provision it. They have to wait for the shipping to arrive at their stock and build their own internal data center, instead of trading and buying that capital expenditure to build out your IT infrastructure. Now you can rent a space on Amazon Web Services or Google or GCP or Azure.
Yeah.
So it's a flexible model where it's a monthly payment. I don't have to worry about maintaining it, securing it, electricity bill, whatever. So that same model here where I'm renting a space to get that same experience. However, the homes that I own, I'm renting it out to produce cash flow for me to do whatever I want to do, whether it's free. I think the new American dream today is about freedom. I mean, it's always been about freedom, but I think flexibility, being able to do whatever I want to do. I want to travel to Mexico next week. I can do that. Why? Because somebody is paying for it. I'm not using my hard-earned money to pay for it. The cash flow is paying for my lifestyle. Yeah. That is the content that I see about it. But so you can go.
No, but I'm saying, but the average person, this, if the average person at the end of their life, their biggest or their largest equity or property they're going to own is their personal home, right? Because people are not disciplined enough where, yes, if I don't invest this money and buy my own home, I'm not taking that money and invest in the right ways. I wish the average person was that way. No, it's now let's go to Cabo, right? Now let's go to France, let's go shop, Gucci and Louis V, versus the forced saving of, if my mortgage is $3,000, and let's even call it, yes, interest might be $2,000, you are paying at least $1,000 in forced savings and equity that you're building in that home. The average person, if their rent is $2,000, they're spending that extra $1,000. They're not going to save it. So I think that's where it would work if people follow the rules, but most people will not. Mekkel, hopefully you agree with that.
Yeah, no, I agree. I'll say the whole 80-20 thing, but it comes down, again, to the buyer's appetite, buyer's goals. But I always tell clients, too, hey, you don't want to be house poor. You don't want to put yourself in a position where you're just living. I mean, you're working to just pay where you're, for your place. But I think it's great that lending standards have tightened up. So they have all their systems in place. You not only need a good realtor, but you need a good lender who's checking everything for you and and making sure that you're actually qualified. I think it's nuts what happened back in 08 and 09, how they were just giving out mortgages. But there's so many checks and balances right now that you just need to make sure you're not house poor, but also create additional income. So like you said, if anything were to happen to your job, if you were to lose your job, maybe you have passive rental income. So that's where everyone needs to create multiple sources of income, but real estate's the best. But if you have other options as well, create more income.
Exactly. And just to add some footnotes to what you said, Mekkel, I think there's a book that I'm going to recommend to the audience. It's called The Richest Man in Babylon. It gave about 5 main points for building wealth. And if you look through the points for building wealth, buying a home was the 5th action item. Starting a business or investment was number 3. But people want to buy their home, that they want their dream home in phase 3 instead of investing in your. So everything has been true. So if we, in order for us to build, true wealth, or trying to educate, the public, about building wealth, I think, my opinion is, I'm not saying don't own a home, but if you're 25 years of age, right out of college, you're excited to buy a home, please stop it. First of all, you're not married. So
how you know they're not married? Listen now.
If you're single, okay, I'll talk about. If you're single,
you talk about the trust fund ones too, or
if you're single, there's no need for you to buy a home because the wife determines where you're going to live and the type of home, the color and everything. So my thing is to put all of your efforts in figuring out what are my gifts, what are my passion, what value or service can I bring to the marketplace that a consumer will pay for. And then over time you keep building the wealth and building the wealth, then you can use that to build your future home for you to leave your family. So I wanted to say that. But an important topic, to transition to the multifamily, given the lack of inventory in the market in terms of home buying, right? It's spurred up a lot of people looking for places to rent today. And I'm going to share this article quickly about the occupancy rate today in the market, which it said it ticked up in April for the first time.
Slightly,
So
yeah.
it said apartment occupancy ticked up for the first time since April 2022. And I'm going to scroll down. It said for the first time since February 2022, the national average for apartment occupancy ticked up month over month to stand 94.2% in April 2024, according to data from RealPage Market Analytics. That rate is a mild 10 basis points above March reading. That trend was seen nationwide for all 4 apartments, so Northeast, Midwest, South. So everywhere, it sounds like apartments is where rent is growing. And why is rent growing? Rent is growing because there's still lack of supply of apartment stock in the market today. So instead of, I guess my question to you is going to be respect to the leveraging the richest man in Babylon's philosophy. Instead of somebody purchasing a single family home, should they consider buying multifamily? Or should we say, hey, pause for a second, because multifamily has its own complications. Like, you have to be knowledgeable. Toyyib, I'll pass the board to you. How should people be thinking about multifamily? Because it sounds like it's an amazing asset class, given the occupancy rate. Obviously, you have to figure out your debt structure, and not go underwater. If you have a floating,
Listen, multifamily is a passion of mine. I love it. So, of course, I'm going to recommend it as an asset class and something we all should have in our portfolio. However, right, we're all seeing, in terms of an acquisition perspective, right, we talked earlier about interest rates at 7%, and Ayo made the point around it's less impacting if you're buying a home from an emotional standpoint, but when you're buying an asset to make money, absolutely, right, the interest rates impacts you, and that impacts cash flow, impacts valuation, impacts the potential to transact. And we've seen, even in multifamily space, we've seen some of that transactions slow down significantly in back half of 22, last year in 23, and even part of this year. In some of the specific markets, so yes, rents are growing, but it's almost like flat. I mean, it's like 0.1% year over year in like April, and that's because we have a lot of properties, a lot of supply that's coming in the market here, even though we're seeing less new construction permits being given out. So if you think about it, it's like new apartment units are coming on the market this year. And so we're getting in bidding wars, right? Like even us, we've started to do more concessions to be able to fill out some of our own units, right? Okay, first month's off, X amount of dollars off your first month's rent, or 6 weeks, just because you're trying to fight for tenants at this point. So should you own that as an asset class because it's multifamily? You have a sense of stability. You can deal with some of the vacancies because you have multiple units, and that's a great way. I think it's also a great way of just being able to build equity and wealth over time. But if you're going to get in that space, one, from a capital perspective, you got to be have enough liquidity to be able to manage through some of what we're seeing in the market from a pricing standpoint. And then two, rents right now are currently flat. It's going to grow a little bit, maybe 0.1, 0.2% by year, but I think it's going to be flat this year as well as next year. But if you own it over the long term, 5-10 years, multifamily owners are going to do really, really well, and hopefully you all agree.
Yeah, and
I agree.
I'll pass the board to Mekkel briefly. I think you mentioned that rents might be flat. Well, Barry Stanley thinks otherwise. He thinks that rent will expect to grow in 2025. So Stanley, and just to give the audience a quick overview, Barry Stanley is one of the the real estate investor. He does commercial real estate. He's the founder of Starwood Capital Group, the creator of the W Hotel, one of my favorite hotels. Beautiful. Anyways, so he has over 100,000 apartments, and he said that he anticipates a surge in multifamily rent growth next year due to fewer new constructions, obviously because of the construction costs is going up, and also he criticized the Fed's renewed focus on keeping interest rates high to combat stubbornly persistent inflation. So, Mekkel, before I transition to Mekkel, is the Fed going to cut interest rate? Because it sounds like a lot of investors like Barry Stanley and all those guys, they're petrified. They're like, listen, bring it down because I have floating load debt. It's messing up my DC debt service coverage with DSCR. What is your base, your gut around Fed cutting rates this year?
I don't know. Everyone keeps talking about it. We keep hearing, it's expected to, and if it does happen, it's just going to stimulate the market more, having more buyers jump into a position where they can qualify. But I just think it's nuts. So we'll see.
Yeah. Hey, your thoughts on that, and
Yeah.
also I tackle it from the supply perspective, construction. Since you're in the construction space,
Right.
do we foresee inflation? I mean, it's trending downwards, but it's still sticky. Like, what is your thoughts about the Fed addressing inflation, and also it's like that double whammy. How can they address inflation, but also they have to reduce interest rates to juice the market?
Right. Yes, it is a sticky situation because the fear right now is if we drop down the interest rate, whatever basis points, it will have the market go crazy, right?
Facts.
And they're just in a sticky situation. I just don't see how I believe, yes, we will have an interest rate cut this year. I don't think it's going to be what everybody expected. I think me and Toyyib spoke about this last year where we just knew that there was going to be interest rate cuts. Everybody was thinking it was April, and I just kind of spoke about it. And I will talk about it from a property management standpoint, what I see in the, on the grounds here. But I already knew it wasn't going to happen until the second half of the year. And I'll be surprised if we have it before the last quarter. All right. And I think the rates will come down, but it's not going to be anything that moves. The basis points will be so low that it wouldn't change anything. Like, people will still say, well, it's still high, right? I think that's what it's still going to end up becoming. The shortage of houses, I think the idea is really to kind of have people cough up what they have. Like I said before, it really, really puts the strain on investors like us, right? For us to we have a lot of investors that have properties that they did a short-term loan on. So it's kind of like a ticking time bomb, right? So you will have no choice but to end up putting it on the market after a while, right? And settling for those prices. I believe, and just my theory, but I believe that is one of the things they're banking on, right? I think when the interest rates were low, and you guys know exactly where I'm going with this, when the interest rates were low, everybody was an investor. Yeah. Everybody was buying. Everybody wanted to buy a rental property. I mean, I even had people that from out of the blue, they're talking about, you could buy this for $50 or whatever the hell, right? So now I feel like it's going to weed out those people out, right? And we serial investors like us, we know exactly what this is. We know it's a storm. We can hold on. We can hunker down, wait till everything shakes out. The people who we don't need will get out of the market. And I believe that's what we're waiting for. Those people who have those ticking time bombs, those bad debts to, get in the market, have those out there. And then we have more supply in the market, right? To kind of cool down the issue that we have. And then we would see a little bit of the interest rates kind of cutting down. Inflation, on the other hand, it goes with everything, even though we're kind of leaning on real estate about this, is bigger than that. I believe it's more on the supply chain side, right? On products and stuff like that outside of real estate that really is a sticky situation that just needs to come down. I think as the Fed kind of focus mainly on those, and food prices going down, baby formulas going down and those kind of stuff, or even transportation and stuff. I believe if as those go down, we wouldn't look too much into real estate for answers. I crack jokes about this a lot with my colleagues here. Everybody, like you said, the interest, increase in rental is right now because everybody's just waiting for that market to come down. But when would it ever come down, right? If there was no supply of anything, you're just having investors like us happy because we don't have no vacancies. But it's really more of those ticking time bombs and those people who really don't mind the interest rate and just buying what they have to buy. That's pumping, money into the market that could really help out. But I think it's everything outside of real estate that is really affecting real estate and not not real estate itself.
Hey, so you're still saying that it's CPI? The Feds are going to cut rate this year? Is that what you said?
I believe so. I believe
Q4?
they'll probably cut. I believe they will cut it Q4, like early Q4. We will see the first cut, and it's not going to be significant. It's not going to be like a significant mood change, but it's just to say, hey, we told you guys we were going to cut rates this year. We gave you something, right? I believe that's what it's going to be, but it's not going to change that much from what I see from my side here.
Yeah. Well, that is interesting. There's definitely lots going on in the market. Really, is there anything else that we didn't cover on this topic before? I have some two.
Yeah, I mean, I guess my point around, earlier we had a topic around, when do we think the Feds will cut rate? And I think I said Q3 of the year. I want to say I'm holding on to Q3, but honestly, Caleb, I might have come up to your side and say I don't think that's going to happen this year at all. I think the latest inflation numbers shows that we're currently trending at like 3.4% year over year. The Feds have made it clear that 2% is the target, but any slight reduction in kind of core CPI numbers, the stock market like celebrates. It's up. Futures are up like 1%, 2%. Everybody's getting kind of too excited. I'm not sure if I really see that happening anymore in terms of a rate cut, and things are just holding firm from an inflation perspective. But the article that Barry had, that you shared with Barry, he's got a dog in the race, right? Like, obviously, he owns thousands of units. If interest rates come down, this is him signaling to the Feds of what he wants them to do, right? And it's kind of criticizing that decision. But I don't think they'll take the bait. So we'll see.
Yeah, you're talking his book. I think, as always, I mean, the more bigger you get, the more you have. I guess you can have some influence via your mic to try to move the needle. But I think it's going to be interesting to see for the next couple of how the next year will shake out, the next 3 to 5 years, because I've been hearing a lot of the biggest statement for the last 2 to 3 years have been higher for longer. So now, is it higher for longer? Is it like 3 years, 5 years? Again, we still don't know what that means, but it's going to be interesting. So that's why it's good to, like as you mentioned, if you're going to get into the multifamily real estate game, having enough capital, having enough liquidity, doing your due diligence, but having a strong team of people who can help you navigate this market condition. Because a little, if you don't go in fully prepared, you might end up being extremely way bankrupt than you actually got in. So I'd like to conclude with these two topics. I mean, this is a real estate podcast, but there's a tons of market. Yeah, go ahead, yeah.
Sorry, I had one other thing that just popped up in my head right now that I think we should actually kind of look into, not to go into a full discussion about, but it's always been the data on the mortgage to rent ratio.
That's a good
I
point.
believe that might actually have a lot to do with understanding the trend of people buying in comparison to people renting. I just know that really does a lot, and I'm just thinking about it from the idea. Like I said, I'm almost on the grounds here seeing how people do it, but like to them it's always like if a rent price is too high, they'll be like, so why can't I just get a house? The mortgage is way less. Right. Or if or if the interest rate is high and they look at how much they have to pay every month, they might say, hey, renting is pretty cool right now, right? I think the renter, I think that is a good trend to look at too. I haven't got the chance to really see that. I know the sweet spot is I think 10, but I'll check that out again. But renter, that was one of the things I just forgot to even point out. It just kind of popped in my head right now. Like I speak to you guys, like, the mortgage to rent ratio is something that we should actually look at. Well, like us as investors, I'm sure we look at those, but it's something that that could tell us trends about different location on the average person standpoint. Yeah.
Awesome. Well, we're going to be transitioning to some sensitive topics here, but I think it's good that we can give a little opinion or quick thoughts on it. I mean, the biggest whatever happened yesterday. I think we had it at 1 p.m. I saw a report on CNN, PDD. What happened to Cassie.
Yeah.
So it's actually really disturbing. I mean, seeing what he did. Obviously, there's a lot of in my opinion, I think his career is over. Like, it's over. First of all, no man should be putting his hand on his woman. That's number one. And number two, like all the allegations that came out, it sounded that where there's smoke, there's fire. and it's very, very disturbing. But I just wanted to just say that you don't have to comment. I just wanted to live in my podcast to encourage any woman who feels I don't want to say feels threatened, but if you feel like you're not in a good relationship, just get out. Like, I get it, you want to be
like a movie, right?
You want to be loved, but if that relationship is not working for you, just back out of it. There's tons of good men out there. Don't use this situation to say that men ain't shit. Listen, there are a lot of good men out there who are the shit, in my opinion. So, anyway, so I want to just any comments. Again, you don't have to comment. But I want to use this platform just to.
No, it's a good call out, man. It's a really tough one. I mean, I really do believe his career is over too. He might as well just go mute for a while. Be a producer or something and just be in the back end there. But it is a tough situation. I mean, yes, let's even say he was provoked, right, to that stage. But I still don't see what really could take you to that amount. I mean, go to the gym or run on the treadmill for God's sakes or something. Like, I don't think I don't see what trumps you to get to that stage. I don't see it. Maybe I'm just in a different bubble from his bubble, but I don't see that. I don't see that being okay. I don't see that being okay.
And I also feel like it's a cautionary tale for people for how people for somebody becoming rich, because sometimes when you become rich and you have a lot of money, you view yourselves to be invincible. And there's one quotation from the Bible that Solomon said. It said, "When you have honey, eat just enough. Too much, you're going to vomit." So if you have all this money and think you're invincible, you're doing all this outlandish or crazy things, allegedly. Again, I don't want to allegedly. I think it's going to show me that at the end of the day, money will never make you happy. That's what I just realized from this whole charade. Money is not. It could buy happiness, you could say. I mean, it's a component to it, but there are several factors to it. Yeah. There's family, there's health, there is so many factors. So, in the pursuit of obviously, as educating the masses about how to build wealth through real estate or through several avenues, always remember that the money does not make who you are. It only magnifies. I mean, that's not. A good point. Yeah, I don't know the term that they use, but money does not make you, but only magnifies who you are as a person. Yep. Yeah. So if you're a bad person when you were broke, you were going to be a bad person when you have tons of money to deal with. Absolutely. So
it's just an amplifier.
Yeah, amplifier. Mekkel.
I think Diddy, he's going down, and I hope more copycat people with footages bring it out and know that they're not afraid to say, hey, this is what happened, so that he can just go down. But like to tie in what you were saying, money, it's a tool. We can't make it an idol.
It's a tool.
So at the end of the day, you have to make sure your priorities are straight. And then with people dealing with any type of abusive situations, it's hard to know at what level to get out. Typically, people get out when it's level 10 or it's too far gone. But it's just trying to read those cues, and if there's something, make sure you got people around you and communicate and get out.
Yeah, no, that's
we need
great point of it.
Sisterhood has to come back. Sisterhood, there has to be sisterhood, because there's always a lot of competition among women. Guys, come together. There's strength in numbers, and always share your concerns. And it's about time the guys also hold each other accountable as well. We have to hold each other accountable, make sure they respect our women, because without them, we are nothing. So, and I'll go around the circle. One more question: who won the battle, Drake or Kendrick? quick highlight, and then we just.
Kendrick won. It's really, really funny. Yeah, but I'll let Mekkel go first. On that one.
I will honestly say I've heard that they've had a beat, but I haven't even listened, so I don't even know.
Don't do that. No way.
I need to go check it out.
Oh man.
I like some Drakes, but I don't know. I'll have to check it out.
Oh yeah, you have to listen to those, man. It was amazing. It was a good time for sure. But I think I'm somewhat of a biased guy when it comes to this situation, because I've always liked Kendrick. Talk about knows that. But I really do believe Kendrick definitely took his time on this, like he's always done, right? He's always taking his time to start something.
it.
You can't rush him. You can't do nothing. But when he comes, he hits you hard, right? You know, it's like trying to fight. You know, if you were to really pick a boxer, you know, maybe Mike Tyson is not the right opponent. You know, like like you would just put you to sleep type of thing. But it would take him a time before he gets you that first punch. You know, so it was one of those. But I definitely think Kendrick did a good job on him on that one. I don't even know how he'll recover with this. I mean, it's the worst thing ever, you know, kind of taking the copyright off of a hit banger and saying that I'm taking the copyright off and having everybody sing it. I mean, everybody's making beats right now. It's even in Africa. Like, people are making African beats and Spanish beats on this. Like, you can't go anywhere out the country and say you're hiding from this song. Like, it's just it's there, you know? Like, I know he definitely had nightmares. There's no way he didn't have nightmares thinking about it. Like, you know, oh, I woke up and there was a song about me. And it's like, no, it really was a song about you.
Okay.
You know, but it was good. It was good. It was a good sparring
It was good sparring. Yeah, it was good sparring. It was good for hip hop. It's good, right? It was huge engagement. Everybody was talking about it on X or Twitter, Instagram, Facebook, like, right? Everybody was streaming. Elon tweeted about it.
Elon Musk also said, "I'm tuned in." I'm like, what?
Nah, I mean, it was a good time. I think that's who won the fight, right? It's the fans, right? I mean, people got excited. I mean, so many podcasts, so many, right? We're talking about it. Like, it got people engaged, listening to more of these music. So, but of course, I think, right, Kendrick won that battle. But I'm Team Drake, so I'm gonna say Drake won the war. So
I was gonna say many of you were light skinned, but you're not. But it's okay though. We lost
Drake.
one.
I'm Team Drake on the long term, but Kendrick definitely did his things, no doubt about that.
Yeah, he definitely did.
And in conclusion, I have to blame Pusha T for disrupting the rap battle. So it sounds like I'm gonna blame him because it's like now you have to have some outlandish tea to win. Like, you're not going all of the lyrics or the how the flow or the beats. You are going off of what is the craziest thing somebody did with it to somebody, and that's the thing I didn't like about it. It got too personal. And listen, J. Cole, you saw the vision. Like, listen, I don't want nobody to talk about my business.
That's the real winner. That's the real winner right here. So give the trophy to him.
It's definitely. So I'm going to blame Pusha for that. But obviously, I'm a big fan of Drake as well. I think he's very lyrical and just combining both rap and harmony and singing and rap. I think it's that two.
Sense.
Yeah, twin talents is very, very good. So
absolutely.
Awesome. Well, again, thanks a lot. A big, thank you to our guests, Ayo and Mekkel, for joining us today. We hope that our cherished listeners enjoy this episode 6 of the World Rate Podcast. Please like and subscribe. Tell your friends to follow us. Again, the mission or the goal for the World Rate Podcast, again, is to feed the mind and challenge the time when it comes to investment philosophies, markets, real estate strategy. That is a core mission. That's why we're here today. So please tell your friends. Do you have any final words, Ayo and Mekkel, before we...
I'll let Mekkel go first.
Yeah, where can people find you?
First off, thank you guys for hosting. Thank you for having me. And I try to do a lot on social media. You can add me on Instagram. It's Mekkel_Blanchard. I try to put out a lot of content to help people.
Awesome.
Absolutely. Please follow that man. Hey, where can people find you? I feel like we asked you this last time. It was like, I'm in the background.
Where can people find you? Follow your content.
Catch him in the streets. Catch him in the streets of DC.
Catch me at a Starbucks somewhere. But no, it's been going a little bit. Truthfully, I really am happy that you guys and I'm really honored to be on your podcast for sure. You guys are more of a best friend, of course. You guys know this, outside of the platform, we talk every day. And it's really motivated me to start getting myself out there. So, but yes, you could definitely meet us. I have the property management side, the home improvement side, and the investment side going. You could definitely, I finally just opened the social media on the investment side.
Good.
Awesome.
And we have our DBA on the side of which is Stripe Management for the property management side. The home improvement has been taken up for years. I just never really did anything social media with it. But of course, as you guys have pushed for it, and really, I really appreciate the motivation. Seriously, it's got me to get out there. So as we're actually hitting LinkedIn and social media and getting on this YouTube side, it's going to be something that I would like to, share the link with everyone so they could actually reach out or even give us any questions that they would want answers on.
Yeah,
Perfect.
definitely. So we'll definitely drop the links on the below of the video. Please, follow them. If you have any questions, you can hit them up on their platforms. And with that, I'll actually conclude by saying, again, stay tuned for the next episode. It's going to be next week, where we continue to explore, creating wealth together and exploring new horizons and also uncovering opportunities in the world of finance and beyond. So with that, thanks a lot for joining us today, and we'll talk to you guys. We'll see you guys next week on the pod. Take care. Bye-bye.
Thank you very much. This was great.